Hi, everybody, and welcome to the UK Mortgage Market Insights for the weekend in the 6th of October 2023. I hope I find you all well. So this new weekly update is available on all social media platforms, so TikTok, Instagram, Facebook, and YouTube. And it's also now available via Spotify as a podcast. So for those of you that prefer to listen rather than watch, that one's for you. Anyway, first up this week, we're going to take a look at swap rates. So for those of you that are watching, you can now see on screen we've got the latest swap rate chart, which was from 10:30 yesterday evening. Now, over recent weeks, we have seen swap rates start to steadily decline, and that's indicated on the chart. If you compare the numbers from the 5th of September to yesterday, you can see that there has been a slight decrease in those swap rates. However, over the course of this last week, we have seen swap rates start to steadily increase again, which is just causing a little bit of concern and is something to watch out for when we start to consider what lenders have been doing recently with their rate reductions. So we're going to keep a close eye on swap rates because it could indicate what the lenders might do next and whether or not we continue to see their steady decrease in their interest rates as well. So this week, we've seen a vast array of lenders emailing us on a daily basis, announcing that they're reducing their mortgage rates across the board, so covering residential and buy-to-let mortgages. We've also had lenders announcing slight changes in criteria, meaning that people can borrow more. So, for example, Virgin just announced that they were changing their income multiple structures. So just a few of the lenders that have reduced their rates this week are the Nationwide, TSB, HSBC, Coventry Building Society, Halifax, and Leeds. That's just a few of the lenders that this week have announced some significant rate reductions, and we are now starting to see some 5-year fixed rates below 5%, which is great news. As I said when we were talking about swap rates, we do have to keep a close eye on things because it's a case of if swap rates continue to increase, lenders may stop these rate reductions, they may pause, and they may keep their rates at a steady level. But we will continue to monitor it closely because hopefully we do see swap rates continue to fall, which will in turn mean that lenders can continue to decrease their fixed rates as well. So we're going to watch this closely. So next up, I want to take a quick look at the Nationwide House Price Index, which came out at the beginning of the week. And as you can see, in September 23, Nationwide are actually reported that there was no monthly change in house prices and that the annual change was still showing as a negative 5.3% year on year. So according to Nationwide, that average house price in the UK is now just under £258,000. We've also put a graph on screen for those of you that are watching where you can see the annual house price change by region. As you can see, the Southwest is the one that suffered the most and Northern Ireland have suffered the least. So this brings us nicely on to the Halifax House Price Index report that was released this morning at 7 a.m. and slightly different to Nationwide. As you can see, Halifax are actually reporting that house prices further decreased in the month of September, where they went down by 0.4%. Over the quarter, prices have reduced by 1.8%, and Halifax's reported annual change is negative 4.7%. So all indices are showing that house prices year on year are decreasing in value. But according to the Halifax, the average house price in the UK is £278,000, which is just a touch more than what the Nationwide are reporting. Next up on screen, I'm just going to show you another graph from the Halifax House Price Index. And this shows the average value of houses from 2020 to 2023. And as you can see, the significant increase in values during and immediately post-pandemic, but essentially we're still sitting way above where property values were in 2020. So all these reports of a major house price crash, I think, are a little bit far-fetched. I'm not entirely sure that we're going to see house prices drop below their 2020 values, but for the moment, prices are on their way down. And I would suspect that the figures that we report on a monthly basis are probably going to show further decreases over the coming months because there is a slight lag with the data that is produced. I think the hope is that house prices will start to level off in the first quarter of next year. Wages have been increasing, and overall this means that despite the slightly higher interest rates that we're seeing, affordability remains good. So hopefully there should be an uptake in business with the mortgage market and people can start to get moving again. So that brings us to the end of this week's UK Mortgage Market Insights. Hope you found the information useful. As I said, for those of you that prefer to watch, we're now available on all social media channels, so TikTok, Instagram, and Facebook, as well as YouTube. And for those of you who would rather just listen, the podcast is now available also on Spotify. So hopefully, one way or another, you can get to listen to this weekly update and you find the information of help. Thanks as always for your support. I really do appreciate it. If you've got anything that you'd like to say, please do drop me a line in the comments. For now, that leaves me to say have a great weekend, and I'll speak to you all again next week. Take care.